Investors, hello. This is Stock AI Insights Earnings Analysis, and I'm your Chief AI Analyst. Today, we're parsing the Q3 2025 earnings from PDD Holdings. And let me tell you, the big story this quarter is all about a strategic slowdown. They're tapping the brakes on purpose to gear up for a long-term fight.
But first, the important bit. Remember, this content is for educational reference only. It is not investment advice. Investing always involves risk. All right, with that covered, let's jump right in.
Okay, first up, let's talk about the top line, revenue. Now, we're seeing some definite pressure here, but it's not what you might think. There's a real strategy behind these numbers.
PDD pulled in a total revenue of 108.3 billion RMB for the quarter. I mean, that's a huge number on its own, but the real story, the interesting part, is in the context surrounding it.
And management isn't shying away from it. The VP of Finance, Jun Liu, came right out and said it. Revenue growth is moderating. Why? Because the competitive landscape is heating up and there are, external uncertainties. This isn't some accident. It's a direct response to what's happening out there.
So, that 108.3 billion RMB, it's a 9% increase from last year. Now, 9% is still solid growth for sure, but for a company like PDD, which has been on this hyper-growth trajectory, it's a very clear signal that they're shifting gears.
And here's the other side of that coin, coming from co-CEO Jiazhen Zhao. He's basically saying the environment is so tough right now, they're intentionally moving away from short-term sprints to focus on the long game. They're choosing to invest instead of just chasing that top-line number.
And look at this chart. It shows you exactly what we're talking about. You can see the revenue is still climbing year over year, right? From 99.4 billion up to 108.3 billion RMB, but look closely at the slope of that growth. It's flattening out, which perfectly illustrates that moderation management keeps mentioning.
So if the company is easing off the gas on revenue, you've got to ask, where are they putting that focus? Where's that capital going? Well, that brings us right to our next section, profitability and investment.
Now, despite all this talk of spending and investing, PDD is still incredibly profitable. They posted an operating profit of 25 billion RMB, and this is so important. It means they're funding this big strategic shift from a position of strength, not desperation.
This right here, this is the core of their whole strategy. Think of it this way. PDD is telling everyone they're settling in for a marathon. They're building endurance, they're building capability for the long haul, while maybe some of their rivals are just sprinting for those quick, short-term wins.
And management is being super transparent about this trade-off. The co-CEO said it on the earnings call. They know these investments are going to hit short-term revenue and net profit. This isn't a surprise, it's a deliberate, calculated move.
Okay, so where's the money really going? Look at this chart. This is the proof. Take a look at their operating expenses. The spending you'd expect to see driving short-term growth, sales and marketing, they kept it flat. But research and development, R&D spending surged by a whopping 41% year over year. I mean, wow, that is the clearest sign of their marathon strategy in action.
Naturally, when a company invests this heavily for the long term, it creates a lot of questions about the short-term outlook. And that leads us to our third section, the company's guidance, or maybe more accurately, the fog of uncertainty surrounding it. So, what did management have to say about the future? They were incredibly careful with their words, and it's a masterclass in how you manage expectations when you're in the middle of a big strategic pivot.
I mean, it doesn't get much more blunt than this. The co-CEO is basically waving a giant red flag, telling everyone, hey, do not just draw a straight line from this quarter's results into the future. They are signaling loud and clear, expect some volatility ahead.
And if that wasn't enough, Chairman Lai Chen added another layer of caution. He pointed to the messy global environment, highlighting risks that are, in his own words, unpredictable and difficult to quantify. So this tells us their worries go way beyond just what's happening with their domestic competition.
So let's just recap the major headwinds management is flagging. You've got intense e-commerce competition at home. You have their own investments dragging on short-term profits. And then you have this cloud of global regulatory uncertainty. It's really a trifecta of challenges they're communicating to the market.
So after all that, how do we piece this all together? What's the takeaway? Let's get to our final verdict. When you combine the slowing revenue, that huge surge in R&D, and the super cautious guidance, a very clear picture emerges.
Verdict? Based purely on the data and what the executives have told us, PDD is strategically sacrificing short-term growth and predictability to heavily invest in its ecosystem for a long-term battle in a fiercely competitive market. It's a calculated pivot,
Plain and simple.
And that leaves us with the million-dollar question for the future, doesn't it? Is PDD's costly bet on this marathon strategy the right move to actually win the future of e-commerce? We'd love to hear what you think, so share your thoughts in the comments. Thanks for tuning in, and we'll see you for the next analysis.